By now, you've tried different ways to analyze the market, but you still haven't gotten the results you were looking for. You've used moving averages, Ichimoku, RSI, and MACD. You've gone into Elliott Waves. You've looked at different price action styles like Lance, Alfonso, and Al Brooks, but none of them really worked. Then you moved on to smart money concepts, liquidity, and inducement, but still, it wasn't what you were looking for. Why aren't we getting results? We think there are 4 reasons why a trader can't make money consistently. The first one is using the wrong method, meaning the technique that's been chosen has a problem from the start and isn't profitable. The second one is misunderstanding the method, meaning the chosen method is actually pretty good, but it hasn't been understood correctly. You've probably heard the third reason a lot, not following risk management and psychology. In other words, the method is right and the trader understands it well, but once they get into the live market, they either stop following risk management or get caught up in fear and greed. But the last reason is simply not having the right tool. Here too, the method is right, the trader understands it, and even follows risk management and stays in control. But in the live market, with all those big and small fluctuations, they don't have a complete tool to apply everything they know quickly and accurately. Other than these 4, there really isn't any other reason, and any other problem is nothing but one of these same 4. So, is there a tool that can solve all 4 of these problems at once? That's exactly what the Index Algo Indicator is designed to do. The first challenge has to do with the method itself. A lot of the styles being shared among traders these days have problems from the ground up. In other words, the method the analyst is relying on to take a trading position just isn't the right method at all. Different oscillators like RSI, MACD, Bollinger Bands, and Ichimoku, along with levels like Fibonacci and a lot of other methods, just don't work. And changing their settings won't make them profitable. For example, we say let's take the average of 21 candles and use that to predict the market. But have you ever really asked why 21? Why not 20? Why not 30? Is it really possible to predict the market with these arbitrary numbers? Definitely not. These numbers are completely arbitrary, and a lot of pro traders see methods like this as pretty shallow. Only a small number of methods really have a solid structure, and most of them come from price action. The approach behind the Index Algo Indicator is one of the more structured ones out there today. And lately, a lot of traders have been paying attention to it. In this style, price action and liquidity concepts are used properly, and it answers a lot of the questions traders have. That's LIT. If the methods you've used so far haven't given you results, you need a fresh look at the market. Stay with us as we go through this fairly complex style in a practical, usable way. But the second challenge? In recent months, a lot of content and training around LIT has come out. Some of it is genuinely useful, but because the concepts in this style are so broad, a lot of what's been said is either incomplete or just inaccurate. The LIT approach behind the Index Algo Indicator was built by going through different training materials and putting the pieces together, and it lines up with the real structure of the market. Along the way, some of the concepts traders talk about a lot, like inside bar, pivot point, FVG, mitigation, risk-to-reward ratio, PD, and more, have been challenged, and Index Algo has a fresh take on them. If you follow this channel's training, you probably won't need any extra sources. Everything is explained in a simple, practical way, and as you go through the lessons, you'll get more comfortable with the method and use Index Algo better. The third challenge has to do with risk management. One of the challenges that always comes up, and despite all the advice out there, still keeps a lot of traders stuck, is not following risk management and trading psychology. Once a trade entry is confirmed based on the strategy and the minimum risk-to-reward ratio is met, the margin has to be set. That margin is calculated based on the account balance and the maximum loss the trader is willing to accept. And depending on whether the trader is more conservative or more aggressive, it usually comes out to 2% to 5% of the total account. In Index Algo, even trading commissions are factored into the margin calculation, which is extremely important for scalpers. But the fourth challenge is simply not having the right tool. Even with all the work that's been done in recent years on analytical tools, there still isn't a complete tool that stays with the trader from analysis all the way through position management. Most indicators only really help with analysis, and after that, they don't do much when it comes to position sizing or trade management. But Index Algo gives you a complete end-to-end process and stays with the trader from the very beginning as the candles start forming all the way through position management. Here's what Index Algo does, and the steps we'll go through together. Identifying valid highs and lows, and how market structure forms. Identifying valid supply and demand zones and levels office. Getting confirmation to enter a trade brez. Setting take profit, stop loss, and checking the risk to reward ratio. Calculating position size and entering the trade day. And finally, managing the position and the stop loss. In the next chapters, we'll go through these steps one by one, identifying valid highs and lows, and how market structure forms. In the market structure section, we go through these: inside bar candles, pivot points, or what we also call swing points, pullback and order flow, market structure, which can be analyzed through either SMC or LIT, how market structure forms with LIT, different types of level break scatter. You may already know some of these concepts, but stay with us because there's a lot of misunderstanding around them among traders. The first thing we look at is inside bar candles. An inside bar is a candle that forms completely inside the range of the mother candle. That means this candle's high is lower than the mother candle's high, and its low is higher than the mother candle's low. These candles have no real value in market structure analysis. Let me be clear about that. They have no value at all. They only form fractal and internal structures. Look at this candle. The next candle comes in and stays completely inside the range of the first candle, so that makes it an inside bar. Then the one after that moves outside the range, so it's no longer an inside bar. Look at this candle. After it, a few more candles form, and all of them stay inside its range, until eventually a candle comes in and breaks out of that range. So within that range, all of those internal candles count as inside bar candles and have no analytical value. One mistake people make is only comparing each candle to the one right before it. So here, they say only these two candles are inside bar candles, and only these two are sitting inside the range of the candle right before them. But that way of looking at it is just wrong. Once a candle forms until its high or low gets broken, every candle that stays within its range is an inside bar candle and has no analytical value. A lot of indicators identify inside bar candles the wrong way. Let's watch a short video. We checked a few indicators that mark inside bar candles and found that only a small number of them catch these candles correctly. Most of them get it wrong. Inside bar candles are a very important topic, and like we said, these candles shouldn't affect how market structure forms. But on the other hand, because of how volatile the market can be, spotting these candles quickly and accurately isn't easy. But don't worry, Index Algo handles this correctly, and it keeps track of these candles across the chart. Even in the indicator settings, there's a change the color of the inside bar candles option, so you can make them easier to spot on the chart.